Hi, now here we are having a typical life analysis. This is boom 500 and I'll be marking my area of support and my area of resistance. So here is my resistance zone. On H4 time frame, price have retested that particular zone more than once. And if you look at this point 2, this is my support zone. And here I am having another support zone. So if I look at my indicator window on H4, you realize that price is approaching my level of 80 and 90, which is my commodity channel index. So I'm going to move to my H1 time frame and see the price behavior. Exactly, you can see now that on my H1 time frame, my commodity channel index is at the level of 90 and 80. And price is already pulling down from the level of this particular resistance. Okay, I've seen a bullish push and I've seen a little rejection and the price closed bearish. So my entry is going to be on my 15-minute time frame. This is my 15-minute time frame. Now on this 15-minute time frame, I've gotten some kind of signal. First, I see this bearish candle. I can see some consecutive bearish candle which confirm to me the presence of sellers in the market, and I've seen it on H1 as well. And then here my indicator window, which is my commodity channel index, has crossed the level of 50. So since it has not gotten to 20, I have an entry at this zone. And if you look at this as well, there is a divergence that has been spotted here. Here is a typical divergence. You can see this, and then when price is making high, you can see this. So I'm going to make my sell based on support and resistance in combination with my commodity channel index. Now look at my zone there. So I'm going to, my stop loss now is going to be above that zone, which is above this zone. That's going to be my stop loss, and then I have my take profit because I'm expecting price now to come into this support zone. Okay, so which means that according to my H1 now, my commodity channel index line will have to move from here to the level of 20. I can take partial when it gets to the level of 50 and then allow to run. That is if I have more than 0.2, but since I'm using a standard loss, I can choose to take profit at 50 or at 20 depending on what suits me. So this is the procedure of how I will make my entry based on this strategy. This is a H4 support and resistance. You can see how I mark it out. I'm doing a combination of price action, support and resistance, neatly marked out. And if you look carefully, there is a little bit of liquidity sweep at this zone. That has already happened here by this candle that pushed to the upside. It swept liquidity from this high. So my H1, my commodity channel is already at the level of 90 and it has curved and closed below 80 zone. So that is one confirmation. Then I went to my M15 and I want to see an entry signal. And on my M15, it gave me a divergence. I'm having a divergence at that zone. So I am having a confluence, and my confluence is my support and resistance combined with my divergence and my commodity channel index. And if you look at it in a long term, you now know that price is in an uptrend, because here we are having a higher high, a higher low, and then this is a new higher high. So you can as well connect your commodity channel index this way, your trend line this way, so that you can establish the fact that this is a divergence. So I want to see this play out. Sorry for the noise in the background. It's because you can get a signal to make an entry anywhere. So I have to make this record because someone requests if I can do a breakdown analysis of a live trade. So this is one of such. Another way to make this entry is to have a trend line connected this way, okay, and then which means now we have this trend line on a lower time frame, so we need to wait for price. That is, if you are using a trend line, I want to see price to break out of this trend line, maybe probably retest it and then continue to the downside. Or better still, you want to use an M chart pattern, you need to wait for price to come and give you an M chart pattern that will take a move to the downside. And now looking at this, you can see my lot size. This is 0.05. Because this is a small account, I'm growing on this particular one, and it is a $5 account, and I'm trying to backtest it on a strategy to grow it. The same application, this is H1 time frame, and on this H1 time frame you will realize that price came all the way down here. First, you have this first movement, price came into it, and then retest it again and is pushing to the upside. So if you look at this attitude of, look at this price here, look at price here again, look at price here the second time, and look at this. So if you connect carefully, you realize that there is a divergence in this zone. Okay, this is a typical case of a divergence. And if you go to your daily time frame, you can see this zone. This is a typical area of a support. So this is a support zone. And of course, we are looking forward to see a massive buy from this zone, because already price pushed down here and there is this rejection from here. So if this candle today closes bullish and engulf this candle, it means that by tomorrow we'll be looking at a massive buy. And of course, if you look at our indicator window, you will see that our commodity channel index is at the level of 10. So this our engulfing candle that is forming, if it forms successfully, it will now push it above our 20 level, which will now validate our buy entry from that zone. And then here you move to your 15-minute time frame in order to find your entry. You can see those range there. So we have our entry on 15-minute time frame. You can see this. So price break out of that trend line. You can see that. So price breaking out of this trend line here gave us this buy entry, and our stop loss is at this low. Now you don't play with your commodity channel index. Anytime your commodity channel index get to the level of either 50, you can take partial or take your trade. If you enter and look at even on a lower time frame, here again we have a divergence. So you can see how this thing works. So this divergence, you are not taking it in isolation. This divergence is combined with the zone where it is happening in a support and resistance zone from a daily time frame, from a 1 hour time frame, and then you're having this divergence. So you are buying, and then look at this candle's formation, rejection of a bullish candle, and that becomes our confirmation. So here now, price got here, we can exit our trade at this point. Okay, and if you have mind, you can allow it to run. You can hear is our boom 500 trade that we took earlier. So you can see how the trade is playing out. Already our commodity channel index is approaching the level of 20 and 10. So there can be a spike at this zone any moment from this point. There's a tendency of a price spiking up, maybe to retest the trend line before it will continue, depending on what will happen. But this is exactly how you can find the entry, and this is applicable. You can see a spike just happened. This is applicable to any of the assets, but basically this is how I use this, and this is how it works. In the subsequent video, I'm going to talk in detail how you can scalp, make your entry using a trend line. Thank you for watching, and don't forget to like, share, subscribe, turn on your notification bell so you'll be the next to get notified when we upload our next video. Thank you, and see you there.